The vast majority of our peers, financial experts and the media tell those with mortgages to make overpayments in order to pay off their debt quicker. We think that voluntarily overpaying your mortgage is a terrible idea, and if you don't want to have a mediocre life, then you should hear what we have to say.
In this video, we're going to look at why you might want to reconsider paying off your mortgage and what you can do with the spare money that will put you on the road to financial freedom. Let's check it out. Welcome to Money Unshackled, the investment channel that sets you and your finances free. I'm Andy, and this is Ben, and if you like what we say, hit the like button and click subscribe. Also, if you want to support the channel, check out some of the affiliate links that we've put in the description below. We've listed loads of cool stuff that will help you become financially free. Let's get into it.
Financial experts treat you like idiots. Whenever we read the financial sections of the newspapers, we are hit with articles about home finance telling you that you should pay down your mortgages quickly and become debt-free. But why make being debt-free your life goal? Surely it's better to make being financially free your life goal. They are not the same thing.
We want you to be financially free, and you don't get there without learning to master debt and mastering investing. Historic low interest rates. Why would you want to pay down your mortgage when interest rates are so ridiculously low? The only financially sound reason to pay down the mortgage is to save money on the interest payments.
Paying down a mortgage works just like putting money into a savings account. You earn interest on the overpayments indirectly by reducing the interest that you pay to the bank. So you're better off by the interest rate. If your overpayment is £10,000 and interest rates are 2%, then you are saving £200 a year in interest payments. What we would do instead is put that £10,000 into the stock market or investment property or some other form of cash generating asset to earn over the long term a much higher percentage return than the 2% offered by the bank.
Let's say you get a 7% return on investing. On £10,000, that would be £700 per year. That's £500 greater than the savings you would get on the overpayments on your mortgage.
What about when rates rise? When interest rates do rise, which could be many years from now, they'd have to rise pretty high to beat the stock market. 7% is a fairly standard return on investment over the long term in the stock market as a whole. So when interest rates approach this figure or your acceptable margin, it may be time to reconsider your options.
Have you ever wondered why almost all businesses borrow money, but individuals are discouraged from it? Businesses borrow to invest in growth, even though they have to pay interest on this money. Individuals should be no different.
But what about risk? Paying off your mortgage is a risk-free way to invest your money, but with low risk comes terrible reward. Mortgage interest rates are currently below inflation, which means that you could actually be losing money by making overpayments in real terms.
A well-diversified stock market index fund invested for say 30 years and run parallel to your mortgage is almost certain to perform better.
It doesn't strike us as at all likely, but there is a risk that even over the long term of say 30 years, you could lose money in the stock market relative to what your investment will be worth today. For instance, should nuclear war break out. But even if this were to happen, you may have one or two other things to worry about.
We do add another caveat here, and that is paying off high interest debt first is more important. Address any high interest credit cards, overdrafts and any unsecured loans first before tackling investing.
These are bad debts, a mortgage is not. Overpayments cannot be taken back. When you overpay, your money is locked away forever until you either sell the house or remortgage it. Not only are you getting a terrible rate of return on the interest that you're saving, but also your money is locked away, trapped.
Paying off your mortgage doesn't make you richer. And once you have paid down that mortgage, you will still have to continue to go to work to pay for the other bills that you have. A fully paid off house does not provide an income.
We say invest that extra money each month that you could be overpaying your mortgage with into stocks, property and business startups and other cash generating assets to provide you with other income streams that can then be used to pay down your mortgage expenses each month and leave you with money to spare.
What we are doing. We both plan to run our mortgages over the maximum term of 35 years to keep monthly repayments as low as possible, despite paying interest on this. This means we have additional money to invest in cash flow generating assets. which means that we will be able to retire much earlier than other people.
We encourage you to think about what you could be doing differently financially. Don't just throw money at a mortgage without first considering the opportunity cost. Question of the day. Do you also roll your eyes when you read experts telling you that you should pay down your mortgage? Tell us in the comments.
Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is Money Unshackled. See you next time.